The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you. You're listening to the Telltales Weekend Update. I'm Ava Cabot.
And I'm Marcus Graham. The content for this show is dynamically curated from the Telltale's Cash Flow Memo. Both voices you're hearing are AI generated. Send us your feedback. We are always looking for ways to improve.
This was the heaviest single earnings week of the cycle for the Cash Flow Memo universe. Tesla, ServiceNow, Intel, Charter, United Health, and Kinder Morgan all reported. Apple, Amazon, Microsoft, Meta, Alphabet, and Regeneron all report next week. On Wednesday's episode 2617, Hunt, Jason, and Mike opened on Tim Cook stepping down at Apple and pressed the question of whether a hardware-led AI bet was Apple's edge or its Intel-style blind spot. By Friday afternoon, the cautionary tale was outprinting the cautionary subject. Intel had its best single session since 1987. We get there. The theme first. This was the first week the market told you what kind of Q1 print it was going to reward. The answer? Very few of them. 3 names on page 1 and page 2 of the memo printed this week. 2 beat. 1 beat and got punished. All 3 are stories the market spent the week repricing. Tesla, page 1 of the memo, after the close Tuesday. Revenue $22.39 billion, a slight beat against consensus. Q1 deliveries 358,000 units, missing consensus by about 7,600. Auto gross margin excluding credits 19.2%, the highest of any quarter in 2025. On the call, Musk pushed unsupervised consumer full self-driving to Q4 of this year at the earliest, and announced full-year capex would rise to $25 billion from prior guidance of $20. Marcus, the cash flow read. ServiceNow, page 2 of the memo, after the close Tuesday. Subscription revenue $3.67 billion, up 22% year-over-year, beating guidance. AI revenue guidance raised to $1.5 billion for 2026 from $1 billion. Customers spending more than $1 million in Now Assist annual contract value grew 130% year-over-year. Stock dropped 18%. Middle East deal slippage, a 75 basis point margin headwind from the Armis acquisition, and a guide reset that pushed normalized expansion out to 2027. Apple, also page 1. Earnings April 30th. Consensus 192 on $109.35 billion in revenue. But the news this week was the succession. Tim Cook steps down September 1st. John Ternus, head of hardware engineering, takes the chair. iPhone shipments in China up 20% year-over-year in Q1, strongest growth among major vendors against an overall market that was down 4%. India's Competition Commission has set a final hearing for May 21st on a $38 billion antitrust case Apple is contesting. Marcus, into the print. What does the memo carry?
Apple is on page 1 at 37 times, trailing free cash flow with a free cash flow yield of 2.6%. Trailing 12 months, Apple generated $105.6 billion of free cash flow, up about 18% from the prior trailing 12. Buyback was $91.8 billion over that same window. That's what Cook is handing Ternus. Whatever the AI strategy looks like under the new chair, the cash engine doesn't need to be repaired. It needs to be redirected. Then, Darcy Self discovered an app.
2 earnings prints sat at opposite ends of the week. Both are deep dives because each one moved its stock more than 20%. One up, one down. And each one reset the conversation around the company. Intel, page 3 of the memo. Q1 revenue $13.6 billion against consensus of $12.6, a $943 million beat. Data center and AI revenue up 22% year-over-year to $5.1 billion. And CEO Lip-Bu Tan called the demand for server CPUs huge on the call. Q2 guide, $13.8 to $14.8 billion, above consensus. The number behind the number. Intel announced Tuesday that Tesla had been signed as the first major customer for the 14A process node for terafab AI chip production. Tan said on the call there was no better partner. On Friday, the stock closed up 24% at an all-time high above $82, the best single session since 1987. Marcus, the cash flow read.
This is where the memo asks a different question than the tape. Intel's trailing 12 free cash flow is negative. The Q1 print does not change that. What the print changes is the slope. Revenue beat by $943 million on a base where management has been guiding flat. The Q2 guide steps revenue up another 2 to 3% sequentially. 18A is hitting yield milestones, and 14A just landed Tesla. If you believe the slope, the question is when free cash flow inflects positive. If you don't, the multiple still doesn't exist.
One more piece of context. The U.S. government's 9.9% stake in Intel, acquired through CHIPS Act conversion for $8.9 billion, is now worth approximately $36 billion at Friday's close. Marcus, that math.
That's a 4 times return for Treasury inside roughly a year, which is the cleanest mark to date on the CHIPS Act capital structure. It doesn't change Intel's free cash flow. It does change the political price of letting the company run an aggressive foundry capex plan. Washington is now long the foundry build, march to market.
Charter Communications, page 5 of the memo, before the open Thursday. Earnings per share $9.17 against consensus of $10.01, an 84-cent miss. Stock fell 24%. The cleanest single-day decline in our universe this week. Inside the print, Spectrum Internet customers declined by 120,000 subscribers in Q1 against improvement in mobile and video. Capex guidance is the second beat. 2026 capex peaks at $11.4 billion before tracking down to under $8 billion by 2028. And the Cox Communications acquisition, $34.5 billion and $800 million in identified synergies, has cleared the FCC and DOJ, but is still waiting on California CPUC approval. One forward question. Capex steps down by more than $3 billion between the 2026 peak and the 2028 run rate. If the broadband line stops bleeding, the free cash flow profile changes meaningfully. Marcus, the read.
$3 billion of capex coming out is roughly equal to all of Charter's current trailing free cash flow. So if the broadband line stabilizes and the Cox synergies actually print, you can re-rate this name in 2027. That's the bull case. The bear case is the same one we just watched for 24%. Peak capex, broadband bleed, and a deal in regulatory limbo, all stacked.
4 catalysts to close the show. United Health, ticker UNH, page 19, Monday before open. Adjusted EPS $7.23 against consensus of $6.57, a 66-cent beat. Medical loss ratio improved to 83.9%, 90 basis points better year over year, and a clean beat against the 85.5% the street was carrying. Full-year guide raised to above $18.25 per share, and management called the medical cost trend acceleration peaked. Separately, United Healthcare announced it will eliminate most medical prior authorization requirements at 1,500 rural hospitals nationwide and accelerate payments to under 15 days. On the memo, UNH trades at 3.7 times free cash flow at a 26% free cash flow yield. The print is the inflection the cost trend bears were asking for. Kinder Morgan, KMI, page 10, after the close Tuesday. EPS 48 cents against consensus 38, a 23% surprise. Adjusted EBITDA up 18% year over year to $2.54 billion. Moody's upgraded Kinder Morgan to Baa1, putting all 3 rating agencies at BBP+ or equivalent. Management projects U.S. natural gas demand at 150 billion per day by 2031, a 27% step up from current levels. The midstream tape this week was the cleanest read on data center power demand in any sector, and KMI is pricing some of it. Amazon, AMZN, page 1, reports after the close Wednesday. Consensus 161 on $177.2 billion in revenue. 2 prints to flag going in. Amazon set its 2026 capex budget at $200 billion, the highest annual capex by any company in history. And Amazon committed an additional $25 billion to Anthropic, against Anthropic's $100 billion AWS commitment over the next decade. Stock closed at an all-time high of $255.28 Wednesday. On the memo, Amazon is 63 times free cash flow at a 1.6% yield. What to watch on the call: AWS revenue growth, capex commentary, and any margin response to a $200 billion build. Microsoft MSFT, page 1, also Wednesday after close. Consensus 407 on 81.37 billion. News this week: Microsoft offered first ever voluntary retirement buyouts to approximately 8,750 U.S. employees, 7% of the U.S. workforce, at senior director level and below. Stock fell 4% on the announcement. UBS expects Azure growth around 38% on the call against a 9% consensus. On the memo, 97 times free cash flow at a 1% yield. At that multiple, the buyout is the kind of cost discipline the market wanted before the AI capex print, not after. That's the show. Roughly $5.5 trillion of market cap reports in a 36-hour window next Wednesday and Thursday. Apple, Amazon, Microsoft, Meta, Alphabet, and Regeneron. The weekend after, we'll have read all 6. Hunt, Jason, and Mike are back Wednesday on episode 2618, picking up Amazon alongside Walmart per their carryover from this week. Download the cash flow memo at telltales.uss. I'm Ava Cabot. See you next Saturday. The views expressed on this podcast are the host alone and do not constitute an offer to sell or a recommendation to purchase, or a solicitation of an offer to buy any security, nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the host nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, express or implied, is made as to, and no reliance should be placed on, the fairness, accuracy, timeliness, or completeness of this information. The host and all employers and their affiliated persons assume no liability for this information and no obligation to update the information or analysis contained herein in the future, and may or may not hold positions in the securities mentioned.